Hi everyone, I hope you're well. I hope you have a really good Friday and I hope you have a really good weekend, okay? I'm just going to dive into Cardano. Before I begin, I just want to say thank you for your continued support across the channel. I've got a Patreon open now if you want to check that out. And thank you to each and every one of you that's contributed to that. That's amazing. Really do appreciate that. And obviously I really do appreciate the feedback and the comments that I get across this channel as well. It's really good. So yeah, diving into Cardano then. So right now you can see that what we've gone up, we're going up and we're retracing. You can't get away from that. It's sort of corrected and you're rolling back over and you're testing key levels of support. So yesterday I did say to you, if you struggle to get above $1.47, you're going to get caught on this level of resistance and potentially it will start to force you down to come back down to test the EMAs there. And you can see that's exactly what's happening. You're coming down and you're sort of testing this 20 EMA on the 4-hourly time frame there, which again is perfectly healthy, okay? But what I want to do is draw your attention to this particular level just here, right where Cardano is sat, okay? Because if you was to lose this particular level right here, okay, you would be looking at a bit of a correction. I want to show you what that is, okay? That particular level right there is $1.41, okay? And if Cardano was to lose that, you would be looking at a correction of around about this for Cardano, because what it is, it's a double top. Okay, a double top M pattern, and it's simple really. You've gone up, you've made a high, you've come back down, you found a level of support, you've gone up, you've made another high, wasn't quite as high, you come back down and you're bouncing off support. If you lose that support, you have a breakdown target, okay, because you're running out of steam. The buying pressure's run out of steam, double top, okay, and you lose that support and you would see that little breakdown there to that sort of level there for Cardano, which is roughly $1.31. So do keep an eye on that, because if you do lose that level of support, you will see that further correction for Cardano, and hopefully, you know, it doesn't quite go that far, and because you can see where the 55 EMA is, it should kick into gear as a high level of support. But what you might see is it come down, okay, lose this level of support. If it does, I'm just giving you the outline and potential targets here, because right now you can see you sort of under the EMA on the 4-hourly time frame there. You sort of caught under the 20 EMA. So if you was to lose that and come down, as this forces you down, because this is what it does, is EMAs, as you hit your head as resistance, it forces you into losing targets, and as you hit it as support, it forces you into breaking targets, okay? So if that was to continually push you down, you would potentially see yourself force down and sort of wick down to that level. But I would imagine you get supported by this 55 EMA, and that's how it works. It's simple support and resistance, okay? So that's basically a little trade there for you on Cardano. If you was to sort of lose this 141, you could potentially see that little cascade down there and a little wick down to that sort of 7% short profit target there, and obviously set profits, take profits and stuff like that. So never be greedy, okay? Always take profits, don't let it ride, because it will, you sort of go down, wick down, and then you'll see it sort of come back up like here. Take profits when you have that sort of target there, take profits, because look at it, wicks down and you've lost that profit, that potential gain there. You know, this wasn't a particular trade. I'm just saying if it was a particular trade, you know, you're losing out on 5% there because of the wick. So that's why you always have set profit, stop loss set and take profits, okay? So anyway, that's basically Cardano at the minute. You're looking at a double top, that double M pattern, rollover type pattern there, okay? So if it holds, brilliant, because what we will start forming now is a new impulsive wave, okay? And hopefully it holds, but these corrections are perfectly normal, okay? And if it was to sort of wick down to that sort of level there at $1.31, that would be roughly a 20% correction, I think, on the grand scheme of things, from the top roughly down to, okay, 15%, which again is perfectly normal. You're currently sat in a correction right now from the top of around, at this particular price there is 8%. You did actually fall down to 13%. So hopefully we can say that the correction's done with, and it is going to start now finding a level of support and start marching on. But you do need to see yourself get back above this 20 EMA, okay, on the 4-hourly time frame. You do need to see yourself get back above that yellow line and start to sort of march on and just back test this as a level of support right now, and just start marching on and making new highs, and obviously breaking out this level of resistance right here, because just like I said to you in yesterday's video, okay, you've got this sort of pattern going on, and it forced you down. So I'll leave that in right now. We can get rid of that, can't we? Yeah, get rid of that. So that's a potential breakdown target, that $1.31. If you start to lose in this 141, then do look at a little bit of a short opportunity down there, okay? And that's basically it. So what I'm going to do is get rid of this right now, and I'm going to lay down a future price prediction, providing we can sort of say that this is a corrective wave, okay, and you're sort of retracing, okay? So what I'm going to do is lay down the retracement levels for you right now, because what I think, just looking at that, I think that that Cardano's gone up in this impulsive wave and it's retracing. I think it's sat on a 0.50 just off the bat. So just from years of experience, I can tell you that I think that, you know, that when I bring this retracement tool in right now, I think that we're sat on a 0.50, and that's a really good area, by the way, and that's where a lot of traders do target. So what you do, you go from the top and you drag it down and you go to the previous swing low, okay, just like that, just there, okay. So and then what you do, drag it over so you can see a bit clearer. I don't know why that blue line's there. I'm going to get rid of that blue line. So that's the top, just there. That's the previous all-time high. Well, the all-time high at $1.55. So what you've done, just to explain it, what I'm doing here, okay, is basically you've got this swing low, which is a previous impulsive wave up and a corrective wave down. So you formed a new impulsive wave up just here, okay, and then what you're doing, you're forming a new corrective wave down. Well, retracement wave, there's so many different names for it, and you can see, yeah, just like I said, you literally like bounced on the 0.50, which is a really good level of support, by the way. You know, you want to see it come back down to that level and get supported, because if it does lose that level, okay, you've got this level underneath it called the golden ratio, and that's the 0.618, which is currently at $1.36. If it was to lose that level, okay, then you would be looking at a further corrective wave and something that's called a reversal wave, and it literally comes down and sort of sits on the previous swing high. Do you see that? It's like I said to you, when things go up, they go up in swing highs and swing lows, and in a nice healthy trend they sort of go up and then they consolidate and rest on the previous swing high, and then before marching on. So if you was to sort of lose this golden ratio right now, you would be looking at sort of rolling down, okay, rolling down like this and then consolidating like that on the 0.786 before sort of refueling, getting your fuel off these energy lines here, off this 55 and the 20, okay, and refueling those rocket ships before you actually started to march on and take out that previous high. So that's something you need to keep an eye on. If you start to lose this 0.618, okay, then you are looking at a level of consolidation. If not, if you can hold, right, if you can hold and sort of get a bounce here, or if you was to fall through and start to get a bounce off that, then you're looking at the next impulsive wave, just like here. Impulsive wave, corrective wave, okay, and you go up and you got impulsive wave, and you come back down, you form the corrective wave, and then you got the next impulsive wave. But if, like again, if you do lose the 0.618, you will enter a level of consolidation. So that level needs to hold, okay, $1.36. Start to fall below that, you're looking at a long drawn out process again, just like what we've just gone through over there. For Cardano, which you sort of enter a longer level of consolidation, it gets a bit boring and a bit flat. We all want these nice impulsive waves up, don't we? We want these nice impulsive wave, corrective waves, impulsive wave, corrective waves. So that's basically it. But at the moment, I'm going to be truthful with you. The fact that you've got a double top pattern on the go there, and you're potentially testing support, you could start to fall through that. You know, it's not an exact science, and I'm not definitely telling you what's happening here. I'm just saying that you could potentially fall through that and just enter a level of consolidation. But if it doesn't, right, and you do start to see this next impulsive wave come up, and you get this nice support here, and it starts to march on, you get above this 20 EMA, then there's a price prediction there, okay, and it's basically you do something like that, okay. So you go from your bottom, which you think is that previous corrective wave there, because that's where the bottom of this entire move is. So impulsive wave up, corrective wave down, that's the base, start to march on, okay. So what you do, you put that on the base, and then you put that on the top, and it gives you an extension, and that's basically your extension, your fib extensions of your next impulsive wave up, providing that now we can actually say that this is the next impulsive wave up. That's your price prediction up there at $1.70 for Cardano. So hopefully it holds, the market comes back, we don't get that drop, we don't lose that level of support there at $1.41, we get that bounce here and we start to march on. And if you do see that march on now and get through these fib levels as resistance, get through them, that's your price prediction just there at $1.70, which from here is an appreciation of around 20% for Cardano, which is great. So again, just can't stipulate enough, you can't lose $1.41. You lose $1.41, you're going to start falling through that 0.50. You're going to start carrying out the larger correction of this double M top and potentially rolling down, hitting the 55 EMA, and then entering a level of consolidation. Okay, so far so good. We want it to hold, but obviously, you know, it's crypto, it's very volatile. Do keep an eye on it. And again, if I'll just give you a little trade opportunity there, because I do think that if you do lose this level, okay, you will carry out that double M top pattern, and it's a corrective pattern, okay, and you're potentially looking at that coming down to the 55 there. So it's a nice little short opportunity for yourself there. And then obviously if you do start to march on now and you start to take out this high here, then you're looking at a beautiful little trade of 20% for Cardano. I hope you enjoyed that update today, everyone. I'll be back soon with another update on Cardano. Stay strong, stay safe, and most importantly, stay tuned, okay? And please smash the like button if you enjoyed that video, and I hope that you find a successful trade in this. But onwards and upwards. Take care, everyone. Bye-bye.